Most people believe that keeping money in the bank account is the safest and most responsible thing to do. Banks often promote the idea that your money grows over time thanks to interest payments. While that's technically true in terms of numbers, the harsh reality is that the value of your money is slowly declining. That's because inflation, the general rise in prices over time, usually outpaces the interest paid by banks. So, even though your balance might increase, what you can actually buy with that money decreases. In other words, your money is silently losing its purchasing power. And leaving it in a savings account is essentially like watching it burn slowly. Fortunately, there are several ways to protect your money and even grow it in ways that beat inflation. Here are 6 types of assets that not only help you preserve your wealth, but also have the potential to build intergenerational wealth that can be passed down to future generations. Precious metals have been considered valuable for thousands of years. Unlike paper currency, which governments can print in unlimited quantities, gold, silver, and platinum are finite resources. That scarcity gives them lasting value. Those metals have traditionally served as a hedge against inflation and currency devaluation. When inflation spikes, the value of money drops, but the price of precious metals usually rises. For example, before 1950, 1 ounce of gold was worth around $400. Fast forward to 2023, and that same ounce sells for over $2,000. Experts even forecast that gold could hit $10,000 per ounce by 2032, making it a potentially lucrative long-term investment. If you're not keen on owning and storing physical gold, you can still invest in it through gold ETFs or exchange-traded funds. These funds track the price of gold, offering you the benefits of gold investment without the hassle of storage or security. While precious metals are rare and valued for their beauty and scarcity, industrial commodities derive their worth from their utility. Materials like silver, copper, cobalt, and nickel are essential for manufacturing electronics, electric vehicles, medical devices, and more. For instance, cobalt is a vital component in batteries used in electric cars. As the demand for EVs grow, so has the demand for cobalt, leading to a price increase from $20,000 per ton in 2012 to $40,000 per ton in 2022. That's a 100% increase in just a decade. Buying and storing these commodities directly is not practical for most people. However, you can gain exposure through stocks of mining companies, mining-focused mutual funds, commodity futures, and options. These investment avenues allow you to tap into global industrial demand without physically owning any metals. In today's world, most national securities and currencies are fiat money. They have no intrinsic value and are not backed by physical assets like gold. Their value depends entirely on the trust and strength of the issuing government. In times of economic political instability, currencies from stable countries tend to retain their value. That's why many wealthy individuals prefer to store their assets in strong, stable currencies like the Swiss franc, British pound, or Chinese yuan. Switzerland, for example, is known for its political neutrality and robust financial system. During crises like the 2008 financial meltdown and the 2009 Eurozone debt crisis, money flowed into the Swiss bank accounts, causing the franc to appreciate. Even during the recent Russian-Ukraine conflict, Russia turned to the Swiss franc for trade when the US imposed financial sanctions. This increased demand for the Swiss franc, raising its value significantly. As of early 2023, 1 Swiss franc could buy about $1.1074 US. You don't need a Swiss bank account to benefit. Platforms like Forex or currency ETFs allow you to invest in foreign currencies with as little as $100. Every dollar bill you've ever seen carries the phrase, "This note is legal tender for all debts, public and private." That's because since the end of the gold standard in '71, paper money has been backed by the full faith and credit of the US government rather than physical assets. While fiat currency is often criticized, government securities like US Treasury bills, notes, and bonds are considered among the safest investments available. That's because they come with a sovereign guarantee, a promise by the government to repay the debt. Stable countries rarely default on their debt. In fact, a government default usually means national economic collapse, something no strong government wants. And that's why bonds from countries like the US, Germany, or Japan are seen as rock-solid investments. You can buy US Treasury securities directly through the treasurydirect.gov website or through the secondary market. These investments usually offer better returns than a standard savings account and can play a crucial role in a balanced portfolio. Government securities are safe, but usually offer lower returns compared to equities. Stocks, though more volatile, have historically outperformed most other assets in the long run. Within the stock market, it's important to distinguish between growth stocks and value stocks. Growth stocks, like in the tech sector, are riskier and depend heavily on future innovations. Value stocks, on the other hand, are companies with strong fundamentals and predictable earnings, often repeating in essential sectors like manufacturing, utilities, or raw materials. These stocks tend to pay regular dividends, offering a reliable income stream in addition to potential capital appreciation. But researching individual companies can be overwhelming. That's where mutual funds and ETFs come in. One great option is the Vanguard High Dividend Yield Index Fund, which focuses on companies with a solid history of paying dividends. These types of funds provide diversification and professional management, making them ideal for regular investors. One of the oldest and most enduring forms of wealth is real estate. Land is considered a non-depreciating asset because it's scarce. After all, we can't make more of it. Whether it's used for housing, agriculture, commercial spaces, or factories, land will always be in demand. According to Bloomberg, U.S. housing prices have tripled between 1992 and 2020, despite a temporary crash during the '08 housing crisis. Real estate not only protects against inflation, but also provides a stable income if used for rental purpose. Unfortunately, most people postpone real estate investing because they assume it requires a lot of capital. But thanks to REITs, or real estate investment trusts, you can start small. REITs are like mutual funds that invest in property. One well-known REIT is Ventas Inc., which specializes in healthcare facilities like hospitals and senior housing. You can also consider leveraged real estate investing, where you take out a mortgage to buy a rental property. If done correctly, rental income can cover your loan payments and even generate a profit. While stocks and bonds are more traditional investments, collectibles are gaining popularity as alternative assets, actually. These include vintage cars, rare art, designer handbags, limited edition watches, first editions of iconic books. What makes collectibles valuable is their rarity and uniqueness. For example, a 1955 Mercedes-Benz 300 SLR all-in-hot coupe sold for an astounding $135 million in 2022. Similarly, Da Vinci's Salvator Mundi painting was bought for $450 million by a Saudi prince. These items appreciate in value over time, especially if they're well preserved and in demand. However, getting into collectibles can be expensive and intimidating. Luckily, platforms like Whatnot allow you to trade rare items like baseball cards and comic books. You can also invest in fractional ownership of high-value items via platforms like Conv and Masterworks, which lets you own a piece of a valuable collectible without buying the whole thing. With inflation chipping away at the value of your money, simply parking it in a bank account won't cut it anymore. To truly protect your financial future and build long-lasting wealth, you need to diversify into smart, inflation-beating assets. From gold to land, from government bonds to collectible art, the investment world offers countless opportunities. By strategically adding a mix of these assets, you'll not only stay ahead of inflation, you'll also lay the foundation for financial security that can last generations.